Alright, let's talk about peer-to-peer lending. Now that's a topic I haven't talked about for a while. As you can see over here on the platform that I'm using myself, Bondora, Go and Grow, I currently have a total portfolio of 7,200 euros. I invested myself 6,800 and I've earned so far almost 400 euros. Doesn't sound bad, right? I get around 6.75% interest paid per year, of course, on my total invested amount, paid out to me every single day. Which you can see over here every single day. I'm getting now around 1.3 euros paid to me into my account, and that obviously compounds and grows over time, which is nice to see. However, as nice and solid as the platform has been for me over the last couple of months, I do feel increasingly worried about peer-to-peer lending and will definitely reduce my position with P2P lenders online and actually move some of those funds into different asset classes. But let's start off as to why I'm not so bullish anymore on P2P lending. When I started off, I really liked it. It was in a low interest environment. Basically, none of the banks, which still sadly too many banks are not paying any interest, but there are a lot of options out there these days as inflation rates is increasing, the Fed and the ECB are increasing constantly the overall interest rates, therefore interest rates are increasing and you can get as a saver more bang for your buck, so to say, higher interest rates. But not so long ago when we had near zero interest rates, getting 6.75% on your idle money, on my cash that was literally sitting around, was really attractive and much better than just keeping it at the bank account where I got literally zero for my money. And for me that was less of an investment. Obviously for that I have my stocks, my crypto, my real estate, but that was just more my emergency fund because it also allows you the ability to withdraw your funds immediately. There's no lockup period. So for me that was very attractive. The only drawback of the platform was actually that they only allowed me to invest 400 euros per month. At the time I thought it was very restrictive. I would have liked to invest more to get even a higher amount and more interest paid to me obviously in return. But the problem was in times of low interest, a lot of people wanted to take out loans basically. If they didn't get it from a bank, they would go to a peer-to-peer lender such as Bondora, and there are many others out there of course. I just chose Bondora and I made a video about this in the past why I chose them. So essentially what the platform does is matching people who need money to borrow the money from those people who have the money, right? These are the lenders like you and I. If we sign up to the platform, match them up and they make a little fee on it, and obviously those two parties get interest, the other one gets a loan. And obviously the interest is higher because those borrowers may not get a loan from a bank due to various reasons. That's why they have to pay a premium, but this way they actually do get a loan and finish their project or whatever they have to do with this money. And for you as an investor, it makes it more attractive because you do get a higher return, but of course it also comes with a slightly higher risk because those borrowers may not be fully vetted as they are in the banking process. Initially, when I started investing early last year, there was actually too many people wanting to lend money and too few people wanting to borrow money. So that's why there was a mismatch and they had to put this cap of 400 euros in place. Later on, they came up with an unlimited plan, but that was only capped at 4%. So there you could invest as much money as you wanted, but you would only get 4% versus the 6.75%. And that's exactly the problem I have with the platform today. While a couple of months ago, when we were at near zero interest rates, 6.75% for me was worth the increased risk. However, these days I can actually get in a lot of places some decent interest rates. Even for example, apps like Lightyear, if you live in the EU or UK, this is a great app to start stock investing and they pay you money on your idle cash. Right now on your USD, you're gonna get 4.25% gross per annum, euros 2.5%, and on your pounds you get 3.75% gross per annum paid to you in interest, and that's actually earned daily and paid out on every first of the month, which is really great. And the benefit of such a platform is that your money is at least protected up to 20,000 euros, the cash you have sitting there. Now, if you have much more than that, then obviously you want to have a couple of different bank accounts where it's protected. But unlike a P2P lending platform where you literally have zero insurance, here at least your money is protected. So for me, the risk versus reward premium is really getting too small. Before 6.75% versus 0%, I could see that benefit. But now that other banks are increasing and they're staying the same, the premium of 2-3% is just not worth potentially losing all my money because there is no insurance. If the people start defaulting on their loans, essentially they run out of business. I might find a way to claim back my money, but I may not, and it might all be gone. There's definitely a much higher chance of that happening, especially in the times we're in, because with borrowing getting more expensive, I don't know about you, but when I look around, I can see a lot of projects being stopped because construction costs are getting much more expensive than initially planned. The labor is getting more expensive. So a lot of projects that they thought would be profitable turn out to be not profitable, and this way they're running out of money, they can't pay back their loans, and the project is gone, and you as a lender may end up losing all your money. And I must say, I'm also quite jealous of all our American viewers, because you, if you have an Apple device, have actually access to the Apple Card, which they recently came out with a 4.15% annual interest on your cash sitting on your Apple Card. I mean, that's absolutely unbelievable. There's zero risk because it's obviously protected up to a certain amount, and that's directly on your phone without having to do anything. You can spend that money, and in the meantime, if you don't invest it, you get 4.15% interest. Sadly, right now it's only in the US, but hopefully they will roll this out to other countries. But when I see things like that and other banks and brokers increasing the interest you get on your idle cash, and at the same time I look at peer-to-peer lending platforms which pretty much keep their rates stable, honestly, it's getting way less attractive with too much risk attached to it. Because don't forget, in times of recession, which people say we are in or is about to come, who knows, but obviously it doesn't look particularly positive out there. A lot more people will default on their loan payment, once again putting your hard-earned money at risk. And of course, it's understandable that those platforms can't indefinitely increase the rates, while banks and brokers like Lightyear, they usually follow the country's central bank interest rate and put a little margin on top, so they can increase and decrease depending on the country specific interest rate. But if that keeps rising, obviously peer-to-peer lenders, they can't continuously increase their interest rate, because eventually borrowing might become ridiculously expensive. Imagine if you had to take out a loan for 25%. I mean, nobody in their right mind would do that. But in order for the platforms to still make money, pay you out as an investor, and provision for failures of loans and defaults of them, which always happens, that is a cushion they need to price in. They would have to increase the interest rates eventually to such a level, and that just wouldn't make sense, and nobody would take a loan. Instead, they would go for more conventional banks, which obviously are in dire need to give out loans, because right now, if interest is high, less people take loans. So they're more incentivized to give out loans more easily, because obviously they make money on loans, which previously in a low interest environment, they're a little bit more reserved on giving out loan, because for them was giving out free money. Now for banks, it's definitely more attractive. So now if you're a peer-to-peer lender, you're really in direct competition with local banks, which are much more attractive towards potential investors who want to take out a loan. So looking at it at the big picture, the macroeconomic outlook doesn't really give me confidence that that situation will change anytime soon. I do believe interest rates are here to stay high, and given the fact that my money at the bank or certain brokers is insured, versus at the peer-to-peer platform, it's completely uninsured, and there might be a 100% chance that I lose everything. So what I will do with this amount is actually start withdrawing, put some of it into Lightyear, at least get some interest on it, right? The other amount I will actually deploy in my stock portfolio and buy some more dividend growth stocks from it. I mean, when you look at it, some of the holdings I have, they pay me a 4.83% dividend per year. One stock even 8% dividend per year. That's even more than I get in interest with the peer-to-peer platform without all the risk, because don't forget, some of those companies have been growing and paying their dividend consecutively for 53 years, 60 years. So these are really serious and solid companies, and are not going away anytime soon, and definitely much safer and more predictable than who knows what will happen to P2P platforms if the markets get worse from here. And one more thing I love about dividend investing versus P2P lending, on P2P, you're only gonna get interest on your capital, which is nice, right? But with dividend investing, I'm gonna get interest in the form of dividends, which is paid to me, some of them on a monthly, some quarterly, some annual basis, but I still get the capital appreciation, like with real estate, where the value of your investment goes up. If the share price increases over time, my investment becomes more valuable, right? I buy it at a lower price, 10 years later, hopefully it's at a higher price. So I already get higher capital appreciation on my investment. Plus, in the meantime, I get all those dividend payments, which I can either use for myself to live off or reinvest to buy more shares and further grow my investments and have the dividend compounding snowball over time. So for me, making this video right now, it's really interesting to see how my thinking as an investor is changing constantly over time. And I think that's natural, right? We grow, we become more mature as investors. Initially, I started investing into a lot of crazy growth stock companies that people told me to invest in on the internet. Then I followed some crypto trends that probably I shouldn't have. Then I went into peer-to-peer lending because people talked about it. And honestly, so far, touch wood, I really was happy with it. I haven't lost a single euro. Everything was working great. I got my interest. Actually, it turned out to be my most successful investment since the last year, because that's the only amount that actually went up versus my stock investments and crypto that went down. But of course, long term, I do believe my stocks and crypto holdings will definitely outperform my P2P holdings. But as I said, for me right now, it's just way too much risk. I consider myself more a conservative investor, and that's why for me, it doesn't really make sense to have even more amount in the future. Maybe one day to have 20, 30,000 euros sitting there. While it's nice to get a bit of interest payment, it's really not worth the risk of potentially losing everything. But I'm interested to hear from you. Are you using any peer-to-peer lending platforms? If so, which one? And what are your plans for the future? Are you keeping it, selling it? I'm really interested to know. Let me know in the comments below. Next up, check out this video over here. Thank you so much for watching. If you enjoyed the video, please give it a like, subscribe to the channel. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.